And on we go with the micro caps. Today I'm going to give my opinion on Aqua Metals, ticker symbol AQMS. Pancakes or waffles?
Muffins.
Muffins. Alright, so I'm going to look at some charts, but they're not going to be very informative because apparently this is more of a story stock. So the numbers really aren't going to give much. Let me just actually fix this real quick. There we go. So if you look at the yearly revenue, they actually had a huge drop off in revenue. I'm not even sure how they were generating revenue before. Maybe they were I don't know the history of the company necessarily. Maybe they did something else before they got into the recycling business, and then they decided to reinvent themselves, perhaps. But you can see how their revenue dropped off a cliff in 2019, and now they're just in development. But they actually never made they never made money. If you can see, they've never had a single profitable quarter, which is interesting. But it's excusable if you have potential. Oh, it looks like somebody's actually buying back shares this last quarter. So someone thinks that they're worth buying back. This hasn't happened since 2015. It looks like the shares have been diluted ever since then, except for this very last quarter. So not much we can learn here from the charts, actually. Not even much from the stats, since the company's not earning any money at the moment. Market capitalization is 58 million, so this is a micro cap, the microest of the micro caps. It's a really small company. Enterprise value 48.05. So they're sitting on about $10 million of cash, which is cool. I guess that's what they got to work with. And everything else is really meaningless. I guess you can look at the earnings per share. It's minus 26 cents. And it can tell you how much they're burning through in a quarter. So you burn cash in order to develop your products, to expand, to pay the salaries of your large management team, and that's how it works. Now, obviously, no dividends or anything like that. And here are the executives, if anyone's interested. Cotton, or Stephen Cotton, Judd B. Merrill, Benjamin Teaker, so forth. Since this is a kind of a development story stock, what we're gonna look at first of all is, look at this. In 2018, it used to be $20. Yeah, I wonder what happened here. I bet you they reinvented themselves. They were mining something else, so they're developing something else, and then they switched off and decided to go into the recycling of lithium business. So since it's a story stock, gotta look at the story, right? And apparently, this stock is a company that recycles things like lithium and other metals like manganese and nickel and other metals that are required for the development of batteries. So they're trying to capitalize on the fact that more and more consumers are switching over to electric vehicles and all kinds of electronics that require the lithium battery components, and there is a big shortage, and there's going to be even a bigger shortage of that metal. And so they think that recycling the metal is going to be a really key feature of the modern economy, which they're probably right on all these speculations. And on top of that, as I look through the articles, there's actually there's a lot of things happening, and they happen very quickly. From the time they announced their patented method of recycling. They have supposedly some groundbreaking method of recycling the metals, and they've got their first samples recently, and they've also are expanding in places like Taiwan apparently, which is interesting. And for such a small company, they're making a lot of moves. Um, they only have about 23 employees, so it's mostly just management, and I bet you they contract out most of the work at the moment. So it's very very tiny, very lean company at the moment in this development, cycle period of theirs. So some of the things that concern me about the company are the availability of recyclable material in the future. I mean, because they're so tiny, right? They're 50 million, excuse me. Been talking in billions for so long. Um, they're a $50 million company. I mean, a single person, well-to-do person, could own this entire company, right? So because they're so small, I guess a doubling, tripling, or even quadrupling of the company is not out of the imagination. I mean, there's probably enough for that. As far as like where it stops out, meaning like at what point is there going to be such a lack of recyclable material for them to turn a profit off of? I don't know what that point is. Obviously, it could grow with time as as more and more older electric vehicles and components need to be recycled. That business could exponentially grow with the industry, but they're really heavily, I think, going to be heavily dependent on that. Like as it stands right now, if we take a static economy, which no economy is static, but if it's they have a cap, right? They have a cap on um, how much they can make, how much revenue slash profit they can do, given the availability of recyclable material. I mean, that's kind of like going to be their stopping point, right? They're not going to be able to develop past a certain point. So they're very much tied to the hip with that industry. Now, if you're a bull in the industry, then this will probably be a very interesting, like speculative way to go. I think that if for me personally, if I were to make a move on this company, I would try to look for leaps, because I don't necessarily want to own the stock because it bleeds. They do keep diluting in order to keep afloat, and I know they're reinvesting, so it's worth it, right? To expand and to make sure that their business kicks off. But I just don't like buying companies that dilute stuff. I much prefer to own leap options. So if I were to play it myself, I would go and buy calls. Now I looked at the 2024 leaps, and the $2.50 ones are trading for 28 cents. So the bid is 25, and I think that's even a little bit pricey considering the cost of the actual stock is 75 cents. That's not much of a difference. Might as well buy the stock, right? However, if you go to the 2023 for next year, and if you bet that the stock's going to catch a bid, then the leap options here could make a lot of sense. Um, so the bid is 5 cents, and the ask is 10, right? So if you manage to get it at the bid for 5 cents a leap, then you'd be getting 100 shares worth of exposure. Currently, the delta is 0.26, which means that the movement's going to correspond to about 26 shares worth of movement. And if you want to bet on a year's worth of movement, or actually less than a year now, this might be a really good way to go. And if it doesn't work out, it's only 5 cents, right? Or 100. It beats paying 75 cents per share. Plus, you're going to lose that money anyways, right? So what I would do is 2.5, $2.50 contracts, and then once time comes, once the expiration date nears, I would just roll the option for another year for hopefully 5 cents again, because if nothing's happened with the stock, right, 5 cents is about as low as the contract's gonna price, and I would just roll it for another year perpetually. Let's say I roll it for 5 years and the price is about the same, then I'm only paying 25 cents for the contract, where I would be paying 75 cents for the stock itself, and I want to lose that money anyways. So I think that's the probably the most intelligent way to play it for me. Um, I would just try to look for really good deals on Leafs and just really be patient. Like set the bid, put like I don't know how many contracts you want to buy, and just wait on it. Just wait until someone actually hits that bid, right? So don't rush it. Don't try to overpay it, because if you overpay, that means you're doubling the price, right? If you're trying to go at asking, then you're gonna be paying 10 cents per contract, and that's gonna be a lot. So you don't want to double. So just be patient. It pays off. So those are really my thoughts on the company. Like I don't know enough about the industry to try to make a judgment. I do see that some analysts have a pretty um, bullish expectation on the company. I mean, the price target for the analysts is $5.61. That's quite a bit higher than it is right now. Um, I haven't read their analysis, but obviously it's a speculative company. Obviously, they're burning through cash in order to expand and stay afloat. And but they are moving fast and things are developing, as I can tell in the news. And again, just to recap, what I would do is I would play the Leap option market, and try to get really, really good pricing, and then just roll the year contract out every year until finally, the company either catches some speculation from investors or from specialists, from generalists, or they actually start making money at some point. I'd be concerned about how big it can grow and the fact that it's tied to the industry. Okay, those are my thoughts on the company. If you have anything to add, just do it. Also, I like to give my opinion on companies. So if you want something that, if you have something that you want me to give the opinion to, I will, because I don't get a lot of comments. So just comment below the company that you want me to talk about, and I'll look at it, and I'll give you my opinion and how I would play it. So, all right, that's it for that one. Peace out.